Hi, welcome to Learnora, the learning lab where complex concepts become crystal clear. You know, like that time you finally understood photosynthesis. We're all about empowering you with knowledge, and today, we're diving deep into the world of credit risk. So, what exactly is credit risk? Imagine loaning money to a friend and they, well, forget to pay you back. That, my friends, is credit risk in a nutshell. It's the possibility of losing money because a borrower can't meet their financial obligations. In this video, we'll unpack the different types of credit risk, from the common to the complex. We'll explore real-world examples, understand why it's crucial for both individuals and global economies, and arm you with the knowledge to mitigate those risks. Buckle up, knowledge seekers. It's going to be an exciting ride. Let's kick things off by really dissecting the term credit risk. In its simplest form, credit risk is the possibility of incurring a loss because a borrower, whether an individual like your friend or a giant multinational corporation, fails to repay a debt. This debt could be anything from a simple loan to something more complex like a bond. Imagine a bank lending money to a business. If that business goes bankrupt, the bank faces the risk of not getting its money back. That, my friends, is credit risk in action. Understanding credit risk is like learning the rules of a game before you play. It allows lenders, investors, and even individuals to make informed decisions, manage potential losses, and navigate the complex world of finance. It's about assessing the likelihood of getting your money back, with interest, of course. Now let's talk about a concept that strikes fear into the hearts of lenders everywhere: default risk. Picture this. You lend money to someone and they vanish into thin air. Okay, maybe not that dramatic, but they simply can't pay you back. That's default risk. It's the risk that a borrower completely fails to make payments on their debt, whether it's interest payments or the principal amount. This risk is influenced by a borrower's financial health, credit history, and even external factors like economic downturns. Think about the 2008 financial crisis. Many homeowners defaulted on their mortgages, which had a ripple effect throughout the entire global financial system. Understanding and assessing default risk is crucial for lenders to protect themselves and make responsible lending decisions. Ever heard the saying, "Don't put all your eggs in one basket"? Well, that's basically concentration risk summed up. It occurs when a lender or investor has too much exposure to a single borrower, sector, or even a specific geographic region. Imagine a bank lending a significant portion of its money to businesses in a single industry, like say the airline industry. If that industry takes a hit, like during a global pandemic, the bank faces a huge concentration risk. Diversification is key to mitigating concentration risk. It's like having a balanced breakfast, a little bit of everything. By spreading loans and investments across different borrowers, sectors, and regions, lenders and investors can cushion the blow if one area experiences difficulties. Let's talk about trust, or rather, the lack thereof, in the financial world. Counterparty risk rears its head when the institution you're dealing with, like a bank or financial institution, can't hold up their end of a deal. Imagine you enter into a complex financial agreement with a company, and before you can say derivatives, they go bankrupt. That's counterparty risk. The risk that the other party in a financial transaction won't fulfill their obligations. This risk is particularly relevant in complex financial instruments like derivatives, where the value of the agreement is linked to the performance of an underlying asset. It's all about assessing the creditworthiness and stability of the institutions you're doing business with. Now let's zoom out from individual borrowers and institutions to the bigger picture countries. Country risk comes into play when a country's economic or political landscape throws a wrench into the gears of financial transactions. Imagine a business lending money to a company in a country experiencing political instability. If the government collapses or implements unfavorable economic policies, the business faces country risk. This risk can manifest in various ways, from currency fluctuations and government defaults to social unrest impacting business operations. Think Greece during the Eurozone crisis. Assessing country risk involves analyzing a country's political environment, economic indicators, and legal framework. Remember those credit ratings you hear about? Well, they play a big role in downgrade risk. Imagine a company with a stellar credit rating suddenly facing financial troubles. their credit rating gets downgraded, making it more expensive for them to borrow money. This downgrade risk not only affects borrowers but also investors holding bonds issued by that company. A lower credit rating means higher risk, and investors might demand a higher interest rate to compensate for that risk. Downgrade risk is a reminder that creditworthiness is not set in stone. It's constantly evaluated, and factors like a company's financial performance, industry trends, and even macroeconomic conditions can impact those ratings and, consequently, the risk for lenders and investors. And there you have it, a crash course in credit risk. We've journeyed through the various types of credit risk, from the individual borrower to the global stage, and hopefully, armed you with a deeper understanding of this fundamental financial concept. Remember, knowledge is power, and understanding credit risk empowers you to make informed financial decisions, whether you're an investor, a lender, or simply navigating your personal finances. Thank you for joining us on this learning adventure. For more enlightening deep dives into the world of finance and beyond, don't forget to subscribe to Learnora, your trusty learning lab. Until next time, stay curious.